All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, April 20th. To those that partake, happy 420 day, and to those that don't, happy Easter. So, before we dive into the charts, looking at last week's trading journal here, I ended up making $9,332.50 over 9 different futures trades. 6 wins and 3 losses that you can see here, and again totaling $9,332.50 gain. So with that, diving into the market that is in front of us, looking at the S&P 500 SPY. We closed the week last week underneath the 9 EMA. We have the 20 SMA coming in and closing that gap. Ideally, in my mind, I would love to see the market just go neutral here for a couple of days, give the 20 period SMA a chance to kind of catch up into this zone around the same price level where the 9 EMA is, and then see a break above that. If we can see that happen, if we get a little bit more price development and stability here at the current level, and then break out above the 9 and 20 SMA simultaneously, I will really, really like that trade setup for moving up back into previous pivot highs and known support and resistance zone here around 550 is target one, and then back up to probably around 665, 666, somewhere right in there for target two. Now, if this does break and go the other way, basically just looking to take out the low not only from Thursday, but also from earlier last week. Both of these have wicks down in the same price level around 520. So if we do get some more instability in the market, a break below 520 would be my line in the sand to then try to start shorting again. Going out to the triple Q, the Nasdaq. Basically rinse and repeat the exact same thing. We have a little bit more defined diagonal resistance line here on the triple Q than we do on the S&P, even though it is intact in both. Pretty much the same thing in terms of our moving averages. I would love to see just a couple of days worth of sideways or neutral action, basically within the range of Thursday's candle last week. And that comes up to around 452 and down to as low as 437. As long as we stay in that price zone, I am considering that a win for the bulls and a little bit more stability coming in, and would love to see just stability for a few days and then have the 20 SMA correspond and kind of converge into the same price zone as the 9 EMA. A break of that and a break of this diagonal resistance zone over the last several weeks at the same time would be a really, really nice trading setup. And I would be looking for that to come back up to around 480 or 485. Going out to IWM. IWM is starting to form up a little bit more. I like the look of this. The RSI and MACD on all of these major indexes looks fairly similar to me, but I do really like the tight price action, not just for a couple of days, but for several days here on the IWM chart, the Russell 2000 chart here. And I would say a breakout above 190 could be playable, but again, we do have that 20 period SMA just above us, so it would have to be a quick day trade. For a longer term swing trade or position trade, something like that, we would really want to see some more stability, just like the other two indexes we've looked at. Let that 20 SMA come down and converge into this 190 level, break that and have a quick target one up to our diagonal, and then target two coming up to about 205 to that 50 period SMA. Going out to Dow Jones. Dow Jones, if we zoom in here, I don't like the look of the MACD on this one as much as the other indexes, but it's in kind of a similar territory. Again, rinse and repeat the same thing. Of all four indexes, I am going to be favoring the S&P 500, NASDAQ, and IWM for the Russell 2000. I'm not super interested in playing the Dow Jones here. I feel like if it recovers, the other three indexes are going to as well. And I kind of like the setup a little bit more on those this week than I do the Dow Jones. So I'm going to leave this one out of it. If we go out to IBIT, looking at Bitcoin, markets are closed right now for the traditional finance, but we did just have a nice breakout with authority and some good volume to support it on the actual cryptocurrency market on TradingView. So I am expecting a slight gap up here tomorrow. And if we break above the pivot high here, which was at $50.50, that is going to be the confirmation of a double bottom on our 200 period daily moving average, with a MACD concluding its bearish journey and moving into bullish territory, the RSI switching into bullish territory. So to me, this is a great opportunity to potentially start adding to longer term positions on your ETF of choice for Bitcoin. Mine is IBIT, but there are several others out there, so choose your poison on that one. But a break above $50.50 here is going to look really good to add to long-term positions. Going out to Ethereum, kind of rinse and repeat the same thing as Bitcoin. It has stability. It has gotten beat up and just kicked around behind the shed a lot more than Bitcoin has. But the stability is encouraging. Even though it's not improving as much on its RSI and MACD, it does tend to trade in lockstep with Bitcoin. So I do think that there is a really good chance in the next week or two that we're going to see a retest of this 50-period moving average around $16. Going out to the materials sector ETF, XLB. XLB, kind of similar theme throughout the rest of the market here. You're going to see this very, very common throughout all of the charts we look at. Little bit of stability starting to form last week. Tight range on the upper side, about $82. On the lower side, down to about $79.50. Whichever way that breaks is going to be the direction that I am looking to trade this week. If I had to give a nod right now, I would probably give it to the bulls because I am anticipating that more negotiations on tariffs and things like that are in the works right now. We will likely get some more news on that front this week, and I want to be positioned for that. But again, just a reminder, we don't want to be guessing at which direction the price is going to go. We want it to break one side or the other of this tight range and then trade accordingly. Going out to consumer discretionary. Consumer discretionary sitting below its 9, below its 20, below its 50 and 200. RSI is increasing a little bit after spending quite a bit of time in oversold territory. The MACD is improving, but still in bearish territory. If we toss this one out to a weekly chart to see if we can gain any more clarity on it, honestly, I'm not super interested in being bullish until we get back above the 50-period moving average around $200 and change. If we do break the lower end of this consolidation, I don't think I'm going to be willing to play that to the downside just because there isn't very much distance before this previous support level in terms of price action there. I just don't see a pretty clear risk to reward. So I'm going to be staying away from discretionary space this week. Going out to XLK. XLK was laggard last week, and I'm assuming that it's probably going to be similar this week unless we get any news specific in terms of tariffs that help or alleviate some of the stress that has been put on tech companies that operate largely abroad. But that said, if we do break above our diagonal resistance here, I will be willing to play that to the top side, and my target will be back up to around 215. Going out to XLE. XLE, I actually don't mind this bottoming pattern here. We had a bunch of volatility back and forth, wiki nonsense, and big candles moving in each direction last week. But we are really oversold on the daily RSI, and our MACD is just starting to give a cross, which means it is signaling that there might be a bit more of a recovery coming our way. I could see a quick trip, just swing trading or day trading, back up to around 85, 75. If we toss this out to a weekly chart and look at it, this is basically bouncing on our 200-period moving average. So coming back up into that 85 zone would also correlate to our support and resistance zone here from the left of the chart and also our decreasing 9 EMA. So I do think that there is a likelihood of us moving higher and moving up into that $85 level. Going out to XLU. Utility sector, I think this one needs to be told on a weekly chart. Let's drop out to that and see a little bit more clarity. We did break down below the 50-period moving average on the weekly chart. We are now basically caught in a pinch between the 20 SMA and the 50 SMA. The 9 EMA is basically just right there in the middle of it. We will see a resolution of this one way or the other, I think, within the next week or two. I am favoring slightly the bulls here. A break above $80, I would be willing to play. And if we go back to the daily chart just to check that, $80, we did have a wick above. I'd want to see a close above that level. I wouldn't fault anyone for playing a strong close above 78.45 if we actually pressed into that price at the closing bell on Monday. But for true confirmation, probably above 80 or $80.35 would be considered confirmation for utilities. Going out to consumer staples, putting this on the weekly chart too. This just looks like a wild mess to me. We haven't really been paying much attention to our moving averages. The 50, the 20, and the 9 have all just been chopped back and forth. The only one that this seems to have been respecting is this 200 period moving average, and we did kind of get a double bounce or double bottom at that. Right now, I don't see a favorable trade one way or the other on XLP, so we're going to leave that one alone this week. Going out to XLC. XLC, similar to a lot of these, we do have overhead diagonal resistance. We do have quite a ways to get to that and a couple of important moving averages in the way. If we do get above the 9 EMA, a short trip back up to 93.60 or so to get to our 200 period moving average. If we toss this out to a weekly chart, you can see that getting back up to that level, we would get back above this 50 period moving average on the weekly chart as well. I don't have a clear read on this one way or the other, and I do think that this area of the market, along with XLK for the technology sector, had run so much more going into the volatility that we've been experiencing over the last couple of months in the market that it doesn't have as much room to bounce because it had a longer drop to be able to sustain to get back down to normal valuation levels. So I don't have a clear read on this one. Looking at the weekly chart, I feel like it could go either way. Dropping back to the daily, I wouldn't be surprised to see some chop in here underneath the 200, but it's probably going to be another week or so before we get above that 200 and then try to test this diagonal resistance line for the second time. Going out to XLI. XLI is going to be fairly similar to XLC, actually. I do see a line in the sand here for the bearish case around 123 and 50 cents. If we toss this out to a weekly chart, we did bounce off the 200 period moving average, came back up just shy of the 50 and 9 EMA. And it's going to be really important to see what price action does here. This is also a known support and resistance area from the left of the chart here. So it'll be interesting to see how price behaves at this level. If I had to bet on this one, I would say I'd give a slight nod to the bears, but I could see it going either way, just depending on what news comes out. So I'm going to stay away from this sector as well this week. Going out to XLF. XLF pressing right up into its 200 period moving average and its 9 EMA. The 20 SMA is converging into that zone. If we can get just stability here for a couple of days and let that 20 period SMA come down and converge into the 200, I would really like that for a potential breakout to the top side on the daily with a target up to the 50 period moving average around 49.35. If we toss this out, to a weekly chart, you can see we're kind of getting pressed between the 9 and 50. Honestly, whichever way this breaks and confirms this week is going to be the direction that I play it next week. But this week, I will likely just be waiting again, like I said, on this daily chart for a little bit more stability and for that price action to go neutral for a couple days, hopefully, to give us a cleaner setup on one side or the other. Going out to XLV. XLV started to retrace. This is technically confirmation on a bearish retracement and does look like on the daily chart it has more room to fall. But if we toss this out to a weekly chart, you can see we're right at that all-important 200 level, and I am expecting a bit of a fight here. So if we start to see some stability on the daily chart, I might hang off or hold off, on any kind of bearish action there. I don't love the look of this one. Again, I like some of the other sectors going into this week better, so I will be playing in different areas of the market. Going out to gold. Gold had a couple of different gaps up this last week and then held right at the close on Friday up towards the highs. If we toss this out to a weekly chart, you can see just this exponential upward trajectory. If we toss this out to a monthly chart, that even gets more staggering. When momentum gets started in gold, do not fight it. Do not try to guess where the top is. This thing can rip, especially if double dip inflation or tariff wars or trade wars or things like that are in the news cycle. For me, I might start to sell some covered calls up around 320 or 325 just to cash flow on this if we get another quick pop and then start to show signs of weakening momentum. We did see a little bit of decreasing or excuse me, divergence on the RSI. Divergence is basically when price does one thing. So over this time frame, price set a new higher high versus the RSI setting a new lower high. So this is divergence, and that basically means that this indicator, the RSI, is signaling something different from what we are seeing in the price chart, and that this momentum might be coming to a close. So I'm going to be keeping an eye on that for gold and deciding based on that whether or not I want to cover my gold positions in cash flow for the time being. Going out to silver. Silver just got absolutely murdered a couple of weeks ago and had just as strong of a recovery, coming right back up into our important moving averages on the daily chart, blasting straight back through the 200. If we toss this one out to a weekly chart as well, we are back above all of our important moving averages on the weekly chart. To me, it seems like heading back up towards the highs around $31.80 is likely. Going out to the dollar. The dollar broke down last week and the several weeks before and has not really slowed down. Last week it paused and then just kind of continued its way lower. If we toss this back to a daily chart, you can see we are overextended terribly to the downside, so I would not be surprised by a bit of a bounce attempt here, either back up to the 9 around $100.20 or back up to the decreasing 20, which I'm guessing will probably be around 102 or just shy of 102 by the time that bounce materializes. But this is obviously in a bearish downtrend. Now, going out to our heat map, looking at FinViz heat map, this is showing the gains and losses for different companies in the S&P 500 over the last 1 week. Obviously, we can see here a lot more green coming in, except for big tech. Big tech, Amazon, Tesla, Meta, Google, Nvidia, Microsoft, Oracle, all of them down for the week, had a kind of a rough week again. And then if we go out to our Forex factory to look at the upcoming economic data, we can see nothing on Monday and Tuesday. Wednesday, excuse me. Wednesday, we have PMI data, and then Thursday, unemployment claims. So fairly light week on that. It should be fairly technically driven this week. So with that, as always, trade safe. Let me know if you have any questions. Hit me up in the comments and like and subscribe if this has been helpful to you.